Don't you want to become a trader? Don't you want to make big profits from the world of stock market? I know, yes. I know almost all of you want to make an active income by trading the stock market. But what to do? Nobody on YouTube is teaching everything that is there to technical analysis, because that is the key to success when it comes to trading. Yes, all you need to do is to master the craft of technical analysis, and if that is done right, all of you can become great traders and all of you can make big and consistent profits by trading the stock market. Hi all, welcome to the 22nd episode of the complete learning series of stock market investing and trading. And yes, welcome to the first episode of the technical analysis masterclass. As always, I put all the videos into a series. The series is available in the playlist up here above. Make sure you watch all the videos in the right order and learn really well. Let's all trade together and grow together. So yeah, in the series so far, in the stock market A to Z series so far, we have learned everything that is there to the basics of stock market. We have learned everything that is there to fundamental analysis as well. I hope you've watched all those videos. Now it is time to start learning everything that is there to trading, because trading is cool. Everyone wants to become a trader, and that's exactly what we are going to learn. I'm going to teach you everything that is there to technical analysis, price action, reading charts, understanding trading strategies and whatnot, so that all of us can become great traders. So the agenda of today's video is simple, is super clear. I'm going to give you a framework to follow so that all of you can become great traders. A framework which will tell you what all are there to be learned when it comes to technical analysis, what all should be learned so that you could become great traders, and that framework is what we are going to learn in today's video. So yeah, without further ado, let's get right into it. The name is Sharique Samsudheen. Welcome to Market Feed. So yeah, it's been quite some time that we are in front of our whiteboard to learn a lesson. So I'm excited. I hope you are also, because we are entering a very important phase of our stock market A to Z series. See, the problem is a lot of people come into the world of stock market, and even before becoming a long-term investor, they want to master the craft of trading. Correct or correct? True, a lot of people want to become a trader, but when it comes to learning and becoming a trader, a lot of them are not in the right path. They learn a few stuff here, a few other stuff from somewhere else, and they try to do trading and they end up losing money. I really don't want to see that happening at all. And that's exactly why we are doing this video. This video, as you can see here, there is a proper structure as to what all you should be learning and how you should be learning so that you can become a good trader. Correct? This video is only about understanding the structure, understanding what to learn, what not to learn, how to learn, all of those things, so that you can learn them eventually and become a good trader. I hope you understand. If that is the case, then mark your attendance. Let's start learning. So one another thing I want all of you to do before watching this video is watch this video I have given in the I button. That is one video which we did earlier in the stock market A to Z series, where we talked everything that is about the basics of trading. What trading is, what are the different types of trading, what should be your expectation, right expectation set when you want to start trading, all of the basic stuff, what is leverage, what is intraday trading, all of those things I've explained in that video. Please watch that video and then come back to this video, because this is the beginning of technical analysis masterclass. We are going to learn a lot of things like technical analysis, technical indicators, price action, candlestick patterns, everything in the coming videos. And this video, again, let me re-establish, is the framework that you should know before you start learning technical analysis itself. Cool? You watched the video, you marked your attendance, let's get started. So yeah, first things first, trading. All of you are here to learn trading and to become a trader. So what is trading? I know you all know this, but let's quickly revise, right? What is trading? So let it be stocks, let it be futures, or let it be options. You buy it at a smaller price after some time. And this time can be within the same day or within 2 or 3 or few days. Within few days or within the same day, you buy it at a lower price and then you sell at a higher price. You make a profit, correct? Or you do the opposite. which is short selling. You sell first at a higher price, then after some time, again, time can be the same day or within few days, you buy it back at a lower price. Then you make profits. If the opposite is done, then you might incur losses also. Now, this is what trading is, right? So trading is basically trading stocks or futures or options, buying at a lower price and then selling at a high price, or selling at a higher price and then buying back at a lower price so that you can make profits. And when it comes to trading, there are two types of trading, right? One is intraday trading. The second is positional, or a lot of people call it swing trading also. Now, I know a lot of you already know this, but quickly said, intraday trading is when all of your trading happens within a day. Market opens at 9:15 a.m. on a day and closes at 3:30 p.m. on the same day, right? Within the same day, if you complete your trading process, then that is called intraday trading. But if you carry your trades for few days, maybe one day or 2 or 3 days, or maybe even 1 or 2 weeks, it is called positional or swing trading. Understood? So it is very clear that in trading, it is being done for generating cash flow, for creating profits or maybe even losses. But if done right, you can make profits, and trading is done to generate a cash flow for you, to generate income for you. I hope that is super clear. And this is exactly why I asked you to watch the initial video, because I have beautifully explained in detail what trading is, what intraday trading is, what is leverage, what makes intraday trading special, what is positional trading. Everything is beautifully explained in that video. Now that you have a basic understanding of trading, then let's start learning about how to become a good trader. What is that framework to follow so that you can become a good trader? What all are to be learned so that you can become a good trader? That is what we are going to discuss now. So the question is very simple, right? What should you learn so that you can become a great trader? Let's answer it in the most simple manner. See, how can you make profits in a trade? Let's take an example. There is a stock, Mahindra & Mahindra. Say Mahindra & Mahindra is trading at rupees 1,000 rupees. The current price is 1,000 rupees. Now you are going to take a trade in this. You get a feel that Mahindra & Mahindra stock price will move up from 1,000 to 1,100 rupees in few days. Then you buy Mahindra & Mahindra. In a few days, Mahindra & Mahindra's price moves up to 1,100. You sell the stock there. You made 100 rupees profit there. This is what trading is. Very simple. Now, what made this trade possible? Your feeling that Mahindra & Mahindra stock price can move up from 1,000 to 1,100. Correct? That feeling you got. What feeling did you get? A feeling that the stock price can move from a certain point to another point. Correct? Now let's come back to the original question. What should you learn so that you can become a good trader? You should learn to master that feeling, which will tell which stock will move from where to where. Correct? You should learn that skill, that craft, and that craft is called technical analysis. Simply put, technical analysis is that analysis that you do, which will tell you that there is a chance that this stock can move from X to Y. If you feel that, then take that trade. No. If technical analysis, by doing this skill that we are going to learn, if you have an understanding that a stock can move down from 1,000 to 800, then you short sell that stock. On a side note, let me make things very clear. Stocks cannot be shorted on a positional basis. Only stock futures can be shorted. Just making things clear. Now, this is very funny, right? I have something noted here. The actual technical, literal definition of technical analysis, as you can find on Wikipedia or Investopedia. Let's read the definition, right? So, technical analysis, definition, okay. Technical analysis is an analysis methodology for analyzing and forecasting the direction of prices through the study of past market data, primarily price and volume. Is this clear? Let's read once more. You can easily understand this. I'll only read what is relevant here. Technical analysis is an analysis methodology. Okay, it is an analysis methodology for analyzing the direction of prices. Right? It is a study for analyzing or forecasting. What is forecasting? Predicting, right? So, technical analysis is an analysis methodology for predicting the direction of prices of a stock. Through what? By doing what? By the study of past market data, which are prices and volume. That is, what technical analysis is saying is that we can predict the future price movement of a stock by analyzing the previous price and volume of the same stock. Understood? And that's exactly what I am saying. Now, if you go and ask National Stock Exchange, all that they have regarding data of a stock is its price and volume, nothing else. You go to an exchange and ask for every stock, for Nifty, for Bank Nifty, all that they will have as data is the price and volume at different points of time. Now it is our job or our duty to analyze and learn the price and volume of stocks and indices at multiple points of time and make sense out of it. And that making sense out of the previous price and volume data of a stock is called technical analysis. Simple. Now, as you can see on the screen, this is chart of Nifty in front of you. Okay? You can see chart of Nifty. Now, what is chart of Nifty? Chart is nothing but taking this price and volume data of Nifty over the last many or a long period of time and picturizing it, showing it on a graph. This is what is chart of Nifty. Now, you as a good technical analyst, you have to look at the chart and make sense out of it. When you start making sense out of it, you will be able to predict what can happen in the coming, maybe in the next day or in the next 15 minutes. And when you have that prediction right, then you can become a good trader. Now, I've used the word prediction a lot. I'm also very famous for saying that never try to predict the market. Because prediction, the word is a bit too harsh, right? Never try to accurately predict the market, because I believe no one can predict the market accurately. All what you're doing with technical analysis is making a sense out of it. Okay, there is a high chance that this can probably happen in the market. If you have that hunch which technical analysis provides, then you can take a trade. Cool? I hope you're getting a hang of it, right? How can you become a good trader? If you can start making sense of charts, or if you can start making sense of price and volume data of a stock, then you can become a good trader, is what I'm saying. Again, I'll take some examples here, right? You are seeing something on the screen right now. Can you remotely guess what this is? Anybody? You can pause, you can think, and then you can answer. I hope not. I'll give you the answer. This is a painting worth 1,400 crore rupees. A painting worth 1,400 crore rupees. Do you understand anything by looking at this? No. But an art enthusiast might understand that. Why? Because he is equipped with enough knowledge so that he can understand this is a painting, and because of some intricate details, this is worth 1,400 crore rupees. Understood? I'll give you another example. What are you seeing on the screen right now? Can you tell what this is? Remotely tell what this is. Now, some might be able to tell that this is ECG, right? But what is this exactly? Mostly no one will be able to say. But if you show this to a doctor can probably say that this is the ECG of a patient who is having a heart attack condition. Very important. But normal people like us, we cannot make sense out of this. Just like we could not make sense out of the previous painting. Now you look at this. Can you make sense out of this? Maybe a few of you can. Some might be able to say that this is chart of Nifty. This is the graphical representation of Nifty's price movement over a time period, right? This is what is called chart of Nifty. Now, how many of you are able to look at this chart and say what can happen in Nifty? Not possible, right? But now you look at this. See, there are a few lines, and I could have easily said that Nifty was all set, all ready for a breakout from that specific level, and that breakout actually happened as well. How was I able to say that? Because I, to some extent, know something about technical analysis. Because I know this craft, I was able to say this. Just like a good doctor could say a heart attack condition from an ECG, just like a good art enthusiast could say a painting is worth so much, a good technical analyst can look at the chart and say that, okay, there is a probability that this can happen in the chart or to the price of the stock. And when you have that feeling, you can take a trade, right? I hope things are super clear. So now you tell me, what is technical analysis? Technical analysis, nothing but making sense of price movements by looking at chart of a stock or an index and being able to say that probably something can happen. And when you have a feeling that probably something can happen, convert it into a trade. Take a trade. If that feeling is, okay, probably Nifty can move up from here, then go long on Nifty. Buy Nifty futures or buy Nifty call option or sell Nifty put option. We'll learn about options and futures. Do not worry. Give me time in the series. You'll be learning about everything. Now, if your feeling is telling you that there is a chance that Nifty can go down from here, what will you do? Short Nifty futures or buy Nifty put option or sell Nifty call option. These different trades you can take. And if your feeling goes right, you'll make money. How can you become a good trader? What is to be learned so that you can become a good trader? technical analysis. And what is technical analysis? That ability to look at charts and say that probably this can happen. Cool. Now, just to make things a lot more clear, we have all learned about fundamental analysis, right? Now, what does fundamental analysis tell us? Fundamental analysis tells us whether a company is good or not. If the company has a potential to grow or not. Fundamental analysis tells only so much. But technical analysis will tell us if the stock price can move up from here or not, or if the stock price can move down from here or not, or if the stock price will consolidate there or not. Technical analysis talks or tells us about the movement of the price of a stock. Fundamental analysis tells us about the quality of the company itself. Now that you've understood what technical analysis is, you can see a lot more things are there on the screen. Your favorite terms like technical indicators, price action, stuff like those are also on the screen. But before we move ahead to learn about them or what is to be learned about them, let me tell you there are 4 big assumptions that the world takes when it comes to technical analysis. These 4 assumptions are on which technical analysis, the field, the science of technical analysis is based on. Let's learn those 4 assumptions. Number 1 is how is more important than why. Okay, now you know I am a person who always keeps on saying that whenever you do something, you should ask why. Right? But again, there is some difference when it comes to technical analysis. How is more important than why? Because the thing is, when you look at a stock's price moving in a certain way, you shouldn't be asking why it is moving like that. Because a fundamental analyst would actually ask, okay, why is the stock price moving up like that? Is something happening to the company? Is there a good news which has come out? Is there a larger global market phenomenon which has happened? All of those questions, a lot more fundamental analysts would ask. A technical analyst should be more concerned about how the price is moving rather than why the price is moving like that. Because when he starts thinking about how the price is moving, he'll probably start looking at a lot of chart patterns, a lot of indicators, a lot of price action based things which we'll be learning. So when a technical analyst focuses only on that, that is when he'll succeed. That is, to make things even more clear, when a technical analyst focuses only on how the price is moving, he learns it so much so that from even a given point, he can start predicting or knowing how the price would even further move from here. And when he has that hunch, he can convert it into a trade. The second assumption is that prices always moves in trends and patterns. Yes, this is true. If you look historically into any stock, any index, how they have been moving in the past, even if they are moving up, no stock moves just like this. Even if the stock is moving up, almost always the stock would be moving up first, then coming down a bit, then moving up, then coming down a bit. It is called creating higher highs and higher lows, then creating a higher high and a higher low. So whenever if a stock is moving up, if there is an uptrend, there would be a pattern to it. Even if the stock is moving down, if the stock is in a downtrend, there will be a pattern to that also. Now the second assumption is price always moves in certain trends and patterns. Now why should be a technical analyst interested in this? If there is a trend and a pattern which is being replicated over time, then it is very easy, right? We can always identify, oh, okay, a pattern is happening. Let me take a trade according to that. Very easy, right? Number third assumption, which is, I think, the most important assumption, is that history tends to repeat itself. Now this is the core of technical analysis, is what I believe. That is, if you look at a stock, if it behaves in a peculiar way when it comes to a certain price level, then in the future also, when the stock comes to that specific price level, it will again behave in the similar way. That is, history tends to repeat itself. Now on the screen, you can see ITC's chart. Now what is very interesting here? If you look into the chart carefully, you can see something very interesting. The level 200. That is, whenever ITC, the stock is approaching 200 from the lower direction, that is from 180, 190, it is moving up to 200. It is taking something called resistance at 200. It is respecting 200 and then coming down from there. This is what is called a resistance. And then once, as you can see, when ITC is crossing 200 with strength, then from above, whenever ITC is coming down to 200, it is not breaking 200. It is taking support there and then it is moving up from there. Right? You can see that, right? Now, what is this magic of 200? History tends to repeat itself, right? Because in the initial days, ITC actually established 200 as an important level. And that importance is being respected in the future as well. And now this is the core basis of technical analysis. Now, why do you think history tends to repeat itself in the world of stock market or in the world of technical analysis or trading? It is only because stock price movement is purely defined by whom? By traders all around the world or all around India. Traders like you and me, we keep looking at charts and we sell and buy a stock, and that is how stock price moves, right? So it is a collective action of lakhs or crores of people which drives the price movement. And because of that, see, once ITC has established 200 as an important zone, you and me and the said crores of traders who are looking into ITC's chart, we all think alike, right? We all think that, okay, 200 is an important zone. So from down, when ITC is coming towards 200, all of us think alike and we start selling ITC. So ITC starts moving down. And then once ITC crosses 200 with a lot of strength, all of us thinking that, okay, it is high time that ITC should break 200. A lot of people buying and ITC crosses 200. Then after some time from above 200, when ITC comes back to 200, how would all these crores of people who are looking at ITC chart react? They'll feel that, okay, 200 was earlier a resistance for ITC. All of these are technical analysis terms. We'll learn about them. Now it should act as a support, and because of that, let's start buying. And all of these people would start buying, looking at the chart, and what would happen from there? ITC will start moving up. What do you understand? History tends to repeat itself, and that is the core basis of technical analysis. And why does it happen? Because trading is nothing but a collective action of a lot of people sitting around and looking at charts and taking decisions simultaneously. I hope that is clear. Then let's move ahead to the fourth and the last assumption. This is something that technical analysts believe in a lot. This is their holy grail kind of a thing. Technical analysts think that when they look at other people looking at the fundamentals of a company to decide whether the company will move up or not, or maybe some global announcement which is going to come from the US, which can decide whether our markets can go up or not. When technical analysts look at all these things, what they tell us, price discounts everything. If a company is doing well, if a company is having great results, or if there is some insider info that only company people know, all of these things is already discounted in the price and is already reflected in the price, is what technical analysts think and believe, and which I think is true, right? Don't you think so? If something good is happening in the company, some people might already know it and they would have already taken action on it, and that impact would have already been seen on the price of the stock, right? Just the same happens with Nifty, Bank Nifty, everything, right? So technical analysts believe that price is everything. You need not know anything else at all. All you have to look at is at the charts, do your technical analysis, which contains technical indicators, price action, and a much more things. And if you do only that also, you can become a good trader. You can become a good technical analyst, is what they believe. Now, if you understood the four assumptions, and if you understand the fact that technical analysis is nothing but making sense out of the chart or the stock price movement, then you can start becoming a good trader, is what I believe. Now, a lot of you would be at a place where you believe that, okay, you understand what technical analysis, and you really feel like learning technical analysis so that you can make money from trading, right? So the next question is, how can you become a good technical analyst? What all should you learn to become a good technical analyst and thus a good trader, right? I would say you have to learn two things. One is technical indicators. Number two is price action. So what is technical indicators? I'm not going into the depth of this. In the coming videos, we'll be actually learning about multiple technical indicators. Now think about technical indicators as certain tools available, and you can apply these tools on top of the chart of a stock or Nifty or Bank Nifty, and these tools will talk to you. See, what is technical analysis? Making sense of the price movement. Now this is one tool which will help you make sense of the chart movement or the price movement on the chart. Cool. Now, I'm sure you would have heard about technical indicators like moving average, MACD, Bollinger Band, Super Trend, VWAP, a lot more, right? There are multiple technical indicators available, and what are they? These are tools which you can apply on top of the charts of stocks so that you can even make more sense by looking at a chart. Cool. We'll learn a lot more about these in the coming videos. The next thing is price action. Now, price action is nothing but the actual study which defines what we learned earlier. What is it? History tends to repeat itself. That is, even if you do not use these tools, there is a school of thought which says that you have to only look at how the price is moving in certain peculiar ways, and that only can tell what can happen to the price. And that specific study is called price action. Cool. Price action is that study which elaborately tells you that history tends to repeat itself and how or what can you expect out of the market in the coming time, and that is price action. Now let me say you, what was the original question? How can you do technical analysis, right? How can you make sense of the chart of a stock? What is the answer? By using technical indicators and by using price action studies. Now, is it necessary that you have to do both? Not necessary. I have seen some traders who use technical indicators alone. I have seen some traders who use price action alone. And I have seen some traders who use both together. Right? I personally use both together. Certain technical indicators and a lot of price action. That is what I personally use. So don't you think that you should be learning about technical indicators also and about price action also? No worries. We'll be learning. Now, what is the next step? After learning these two, you should create trading strategies. Okay? Now you know technical analysis. By doing technical indicators and price action strategies or price action analysis, you have some understanding about the chart. The next thing you need to have are trading strategies. No worries, going ahead in the stock market A to Z series, we'll be learning about trading strategies also. Intraday equity trading strategies, swing trading strategies, futures and options trading strategies. We'll be learning about multiple strategies. No worries, just be with me. Watch all the videos, learn really well. After learning technical analysis, technical indicators, price action analysis, we will learn about trading strategies also. After learning trading strategies, the journey is not done. You will not become a good trader after having trading strategies. You need to have a very good risk and money management system also, which also we will learn. Okay, we will learn risk and money management systems, techniques, how to do proper position sizing, because a strategy is not good at all if you don't have good position sizing. So we'll learn that also. So what was our original question? How can you become a good trader? Correct? That was the original question. Now the answer to that is very simple. You can become a good trader if you can start making sense of the charts, which is technical analysis. Right? So first we'll have to learn technical analysis. So inside technical analysis, we'll have to learn technical indicators and price action also. And then I said, it doesn't end there. You have to learn good, or you have to have good trading strategies. And after having trading strategies also, you need to have good risk and money management. When all of this is done, you can become a good trader. You can start making big, consistent profits in the market. Cool? Now, what was the agenda of this video? In order to know that framework as to what to learn, what all to learn, what is the right framework of learning so that you can become a good trader. Now, this is the framework. You have to learn all this. Under technical analysis, you will be learning charts itself to begin with. You'll see charts, learn charts, different types of charts, candlestick patterns, multiple candlestick patterns, volume as an indicator, all of those things you'll be learning here. Once that is learned, we'll go to technical indicators and we'll learn some basic technical indicators like moving average, MACD, RSI, stochastics, all of those we'll be learning. Then we'll be learning price action based chart patterns, which are super important. We'll be learning that. After that, we'll go and learn a lot of trading strategies, including equity, futures, options, everything we learn. And finally, we learn about risk and money management. And that is the journey that we are in. So yeah, that is it in this video. What was promised, I hope was delivered, right? Now you have a basic understanding as to if you want to become a good trader, what are all the things that you should be learning? And I'll be giving all of those in the coming videos, no worries. So yeah, if you like the video, make sure you smash the like button, get down into the comment box, talk to each other, ask me doubts, please ask me doubts. I'll make sure either me or my team replies to each and every one of your actual good doubts, right? I'll make sure we do that. And also, as I always say, share the video to maximum people, invite them to join the part of this amazing learning trading community. Now, let me tell you one thing. We have started this trading learning journey here, right? Today, we have learned about the framework as to what all should be learned. And in the coming videos, we will be learning everything. One thing, promise me. Be with me in this journey. Learn with me. Finally, we will start trading together. I'm even planning that. We'll even start trading together and we'll actually share each other's profits and see that we as a community, we are making profits together. Are you ready for that? I'm super excited, right? Because we start learning together, then we'll trade together and then we'll make profits together. That is the journey that we are in. So make sure that you're super pumped and you learn really well. So yeah, that is it from my side for this video. As always, let's learn, trade, invest and grow together. See you in the next class. Bye-bye.